Welcome back. Well, let's focus on the new listing. Then, we just had one that took place earlier today. Akums is the new kid on the block. Well, they've listed with a gain of close to around 6%, and now the stock is up close to around 12%. Well, to understand how the business is shaping up, we have with us Mr. Sandeep Jain, who joins us to help us out with the way forward. Hi, Mr. Jain. First, good morning, and thanks a lot for speaking to us here on CNBC TV 18. Congratulations on a solid listing. Market conditions are a little bit feeble, but your stock is doing quite well. So let's focus on a couple of numbers then. For this year, what kind of a revenue growth are you looking at? And if you could split it up for us, how much will branded generics contribute as a percentage of your mix? And exports as well, I think they're in mid-teens. How much will that contribute as a percentage of your mix? Please go ahead.
See, we have been always achieving around 15% CAGR, and I hope that we are working on the same, and we will be able to maintain the same pace. As far as our branded marketing is concerned, we are around 10%, and this API business is somewhat very, low, around 1.5%. Around 2% we can say, and we are working on the same. And as we are having two European GMP plants which have been GMP approved very recently, European GMP, and we hope that we will be in a position to get good business from those two plants as well. And we are having more than 500 dossiers already approved in 60 countries, more than 60 countries, and we are working on the same to grab more business from these countries as well.
So exports go up by how much? I think they were 17% of the mix, right? Where do you see it headed?
Yes. You're talking about the marketing business that is divided into three segments. Around 78% of the business comes from CDMO only. We are into CDMO, that is contract development and manufacturing organization. We manufacture for almost all of the big companies of the country and holding around 10% of the total domestic requirements. And as far as CDMO space is concerned, we are having the total share of 30% of the total CDMO space of the country. And we are 25th largest in the country, in the world, and first largest in the country. And the remaining business is around 20%. Say 17% is marketing, and out of that marketing, 10% is from branded marketing, and around 4% is from exports.
All right, take that point. If you look at the valuations of the company at which you have offered, it's been much lower, but that also coincides with much lower margins as compared to peers. So if I look at, say, someone like a Suven or Divi's margins, they're close to 30, 40 odd percent. You are about 12%. Yes, there was a one-off in FY24, but on a sustainable basis, what is the kind of margin that you can deliver?
We are into research and development. Around 400 scientists are working day and night to develop more and new products. We are having more than 200 different kind of niche formulations which have been introduced to the country for the very first time or second time in the world, like that. And we are working for new molecules which always give better margins to us. As far as our current business is concerned, it is in a very sustainable profit margins, and we don't intend to increase so much of margins into that. But
how
whenever
much?
There will be a new product or new market.
No, because as we see, on the screen as well, the information tells you that Suven Pharma does close to around 20%, 42% margins. You have Gland, which is around 25%, Divi's around 31%. Innova Captab is another 15%. So amidst all of that, you are at just about 12%. So you're looking to improve them. To what extent can you improve it? Can it go to 20, 25%?
We don't intend to go for those 20% margins. We intend to maintain the same margins. And as far as Divi's or Suven is concerned, they are into different kind of the products. Divi's is mostly into APIs, and we are into formulation, and that's true for the specific domestic Indian market, India-focused domestic CDMO player. We are working for out of top 30, we are working for 26. May it be Indian companies, may it be multinational companies. Our focus is CDMO, and that is means you cannot compare us from Suven or Divi's.
Okay, all right. Mr. Jain, could you help us out with, as a percentage of a consolidated mix, how much is exports as of the last year?
Yeah, 4% is exports.
4% is exports. And where do you see this number headed?
Yeah, it is going to be very high, of course. But
So
in
in the next 3 years, should it be in double digits?
Yeah, definitely.
In the next 3 years, it will be double digits. Got it. What about the utilization levels of your, in terms of capacity utilization level? We understand it was less than 50% as of the last year. So could you help us out with when do you see it move up? Point number one. And since you've incurred some capex, at optimal levels, what could your revenue potential be of the company?
See, we are working at around 40%, 42% of the total capacities, as we are holding around 18,000 SKUs, which is the largest in the world, and 4,000 different formulations, which is again the largest in the country. And we are serving for around 1,500 different clients. That's why, because of the complexity and because of the so many changeovers, etc., we are working for around 40% of the total capacities utilization, and we can always scale up it at 60%. And we have in the past as well, we have scaled up for 60%. So in almost all of the production lines. But whenever we go for more than 40-45%, we always make sure that we will have to install more plants and more capacity has to be built, so that the capacity should be spare enough to take care of the ongoing need of the country, as well as the global needs.
Right. Final question before we let you go, sir. You at the start of the conversation said that you have 2 EU GMP approved plants. I just wanted to know, of the total number of plants that you have, how many are EU GMP approved, how many of them are US FDA approved, and with these approvals, what is the increase in revenue likely to be?
See, we don't have any US plants right now with us, and 2 plants are European GMP, because 2 plants are sufficient enough to go into those markets. One is for oral doses and one is for injectables. Other plants have not been applied for European GMP because those are not required. As far as say volume is concerned or revenue is concerned, of course it is going to help us. But we cannot give you any futuristic numbers.
All right, we take that point. But this is a recent development, so this is something that we'll keep an eye out on, increased revenues coming in from Europe. And if at all at some point you go, you look at US as well, you will obviously have to get some of your plants approved by the US FDA. Congratulations on a listing, a strong listing, up 13% for your stock right now. The street will be eyeing growth as you promised. 15% CAGR is what you've done, and that's something that you intend to maintain. With that, we'll take a short break, come back, focus on the markets itself, and talk a lot about specific stocks. Stay tuned.